Good morning, Ian Cooper here with Penny Stock Titans. We may be running into a bout of excessive volatility moving forward. And one of the best ways to track that is with the volatility index, or the VIX, otherwise known as the fear gauge. It's a measure of expected price fluctuations in the S&P 500 over the next month. As it begins to rise, it tells us that fear is beginning to escalate again, and that we may want to consider selling stocks, protecting our stocks, or maybe even shorting the markets. Now, the VIX shows us the S&P 500 volatility, but we can also look at the RVX to track the volatility of the Russell 2000, the small cap index. Now we can see that that's just beginning to pivot and move higher as well. Now at the moment, the RVX is around 18 after pulling back from 36. Now, when the RVX was at 36, that's when the markets were aggressively falling apart on China trade war fears. And it's pulled back substantially as the markets, the Russell 2000, for example, has pushed aggressively higher since the start of the year. However, the RVX and even the VIX are beginning to turn higher again as tensions in the markets begin to push higher. Now, this is an indication that we may want to start shorting the Russell 2000, protecting our positions, or using aggressive money management techniques to protect our current wins. Now, markets are seeing sizable tensions again because of renewed trade war concerns. Now, over the last month, markets pushed higher on hopes for a trade war resolution. Now, that was until Larry Kudlow told Fox Business. The president has indicated that he's optimistic with respect to a potential trade deal. But we've got a pretty sizable distance to go here. With those three untimely words, pretty sizable distance, markets began to pivot and turn in the other direction. The VIX and the RVX began to tick higher from their lows as well. Now remember, if China and the U.S. cannot reach a deal by the start of March 2019, additional tariffs on Chinese goods could take effect, and that's likely to include tariffs on $200 billion of Chinese goods to 25% from 10%. And should that happen, we could run into further global economic slowdown fears and excessive volatility in the markets. In short, if there's no progress, markets could begin to pull back severely. It's why we want to pay attention to the VIX and the RVX, because they are an indication of volatility in the S&P 500 as well as the Russell 2000. They can tell you exact points where you may want to strongly consider protecting current gains or perhaps even shorting the markets. It's just something to keep in mind if you're looking for opportunities in a crazed market. Again, this has been Ian Cooper with Penny Stock Titans. We'll speak again soon. Thanks so much.